Hey everyone, welcome back to the channel, and today, we need to talk about the tough day Opendoor Technologies just had. Ticker symbol, OPEN. On Thursday, the stock dropped sharply, closing the day at just $1.84, marking an 11% slide from the previous session. And while volume was noticeably lighter than on the big rally days of early July, the move has definitely gotten people's attention. Let's be clear, this wasn't panic selling. But it was a sign that momentum, at least the retail-led kind, is starting to fade. Now, if you've been following this story, you know just how wild this ride has been. From under $1 in late June to nearly $5 earlier this month, Open has been one of the most explosive stocks in the market. It gained over 300% in a matter of weeks. But as we know, markets move in waves, and right now, we're seeing the wave pull back. So what's going on? Let's unpack Thursday's move and what it means going forward. First off, the sell-off brought the stock to a key psychological level, back under $2. For many traders, that $2 mark was seen as a floor, a level of support, and closing below it is shaking confidence a bit. But it's not the end of the road. In fact, some would argue that this kind of pullback was inevitable. No stock runs in a straight line forever. But what's more important is why this is happening. The short answer: we're now in a waiting game. The momentum from the shareholder vote and retail hype is behind us, and the market is looking for the next catalyst. That catalyst is earnings. And right now, expectations are high. Let's not forget, Opendoor is not just a meme stock. It's a real company with a real business model in real estate, one of the most important sectors of the economy. They buy and sell homes. They take inventory risk. And they rely on margin efficiency to drive profitability. The good news? Housing data has been improving. Mortgage rates are stabilizing. Inventory is slightly loosening. These trends could help Opendoor in Q2 and beyond. But here's the thing, could isn't good enough anymore. We need results. So next week's earnings report has become the defining moment in this stock's current narrative. If Opendoor shows improvement in margins, even just slightly, it would go a long way in convincing investors that this isn't just another short-lived hype play. We're also going to be looking at revenue, cost controls, and net loss figures. Any sign of operational discipline, and any indication that Opendoor is on a path toward profitability, will be seen as a green light. But let's also be honest. If the numbers disappoint, the stock could retrace even further. That's the risk of a momentum-driven story without fundamental follow-through. Now, let's talk short interest. Despite today's drop, it's important to remember, historic short positions are still under pressure. Many of them were entered when Open was trading under $1.50, some even under $1. So even now, many of those shorts remain underwater or break even at best. That doesn't mean a short squeeze is imminent, but it does mean there's still fuel in the tank, especially if the earnings report sparks optimism. Another point worth noting, Thursday's volume was light. That means this wasn't a panic-driven exodus. It was more of a slow bleed, a lack of buying conviction. And that's common when traders are waiting on a catalyst. Which is exactly what we're doing now. So what should you watch for next? Number 1. Retail chatter. Sentiment has cooled, but retail investors are still watching. If the company gives even a glimmer of good news, the crowd could come flooding back. Watch the forums, watch the volume, and watch for momentum signals. Number 2. Technical levels. We're now back below $2, which is disappointing, but not fatal. The next key level is around $1.60. If the stock holds above that heading into earnings, it may be seen as a constructive base. And number 3, earnings date. As of now, Opendoor is expected to report next week, and the company hasn't announced any delays. If anything, they've been tight-lipped, which adds to the anticipation. Once we get confirmation of the earnings date and time, expect volatility to pick up again. So to recap, Opendoor stock dropped 11% on Thursday to close at $1.84. Volume was light, no mass panic, but a definite cooling of retail momentum. The rally is now on pause as the market waits for earnings. Short positions are still vulnerable if a new rally begins. All eyes are now on earnings, the next major catalyst. If you're holding, the next few days are all about patience. If you're considering buying, you may want to wait for the report. And if you're on the sidelines, this is a great moment to watch and learn. This story isn't over. But today reminded us that momentum alone can't carry a stock forever. Fundamentals matter. And Opendoor now has to deliver. Thanks for watching. If this video gave you some clarity, hit that like button, drop a comment with your thoughts, and don't forget to subscribe. We'll be here next week to cover earnings, and whatever comes next.